Let's start this week off with a very near-term technical thing taking place in the NASDAQ 100 that I think traders and investors should be aware of. We remain in the middle of earnings season, lots of earnings still left to come, but in the very near term here, there's a bunch of stuff, particularly in the NASDAQ, the QQQ, that I think technically is important to know. We had a arguably surprisingly strong end to the week last week in the NASDAQ 100, although we did get quite oversold around midweek. On the weekly chart, there's not a heck of a lot of stuff that makes me immediately turn bullish, and that's kind of backed up by the daily chart. So again, this is very technical and it's very near term, but I do think ultimately the NASDAQ 100 will retrace more. I think the QQQs could go towards 400-ish or so, but it does depend on what happens here in the near term. So earnings and structural and economic data aside for a minute, we actually saw technology stocks top in the first couple of days of the month of March. That's not something that the bulls want to hear, but it's a fact. And so essentially from early March till the 15th of April, the NASDAQ 100 essentially consolidated sideways. And so we can draw that in a couple of different ways. I'm going to give you this in sort of a channel as well. So, and this is important because there's investor psychology embedded here. So basically this gray area here that I'm drawing was essentially a month and a half long consolidation period. And if history is any guidance, I would imagine that investors who bought in this area, and there were plenty of them given how bullish sentiment was coming into March, I wouldn't be surprised as we get into this area or to the bottom of it, that investors that got, it's mostly traders, that got nervous on the little dip we had starting in middle of this month of April, may start to get out and take some profits. The 50-day period moving average, which is the yellow line on the screen, is also a reference point here. So we basically bounced very strongly, I might add, last week off of the Friday, the 19th of April lows. We bounced about 4 3/4, call it 5%, which I think still sets us up with the possibility of an ABC corrective for a consolidation move. If you don't know what that is, let me enlighten you. An ABC corrective move is the most normal of things to happen. I do expect this to happen. Again, as I said, you have wave A, then you have a little counter trend bounce, then you start making a bit of a lower low, and all this within the context of a still bullish trend, meaning ultimately as we get into maybe the summer months, I don't know, that's the difficult part, is ultimately we start to bounce again. I don't know what that is. We'll tackle that as we move forward, but I think for now this is an interesting play, and I would expect the NASDAQ 100 to be able to find resistance. If we start breaking well into this area up here, this consolidation period, this becomes less likely. So we need to be open-minded here. One of the things that I like to do, along with my colleague Brian, is we like to do something called a poor man's covered call. It's a wonderful strategy, whether we look to capitalize and generate income on stocks we already have, or if we want to do a covered call strategy without all the capital outlay that a covered call actually requires. That's why it's called a poor man's covered call. We're going to discuss the strategy this week in our live strategy and trading session. We would love to have you on board and show you how we do the strategy. You can join us by signing up down below, completely free, and we look forward to seeing you there.